So today we're going to answer a frequently asked question we get around this time of year when it comes to tax loss harvesting. That is offsetting your gains and your losses to try and minimize your tax liability, specifically when it comes to cryptocurrencies. Because cryptocurrencies are relatively new and the IRS hasn't gotten around to classifying them as a traditional financial security, the rules are a little different. Anytime you hold a loss in cryptocurrency, it is in your interest to sell up to the extent that you have gains elsewhere. If you have $100,000 in gains and you have $100,000 in losses in your crypto, you should sell your crypto to bring that down to zero. The reason for this is there are no wash sale rules for cryptocurrencies. So you can sell that position you have in Bitcoin, for example, and a minute later buy back the exact same Bitcoin. Functionally, nothing changes whatsoever. You may miss out on 5 or 10 minutes of price movement, but you get to book that entire loss on your taxes and not pay accordingly. Most people don't know this because in stock market, you need to wait 30 days or 31 days before you buy back that security to avoid a wash sale, where they disallow that loss. Or you need to buy a different fund that holds similar holdings but different to make sure that it's not buying back the same thing. With cryptocurrency, buy back the same thing if you want. This specifically pertains to cryptocurrency being held directly and traded on exchanges. If you're holding cryptocurrency through an ETF or a mutual fund vehicle, that's going to have the same rules as traditional finance. So for example, if you bought Grayscale Bitcoin Trust, GBTC, in your IRA, well, the IRA is a non-taxable account, so you can't book the losses, and the Grayscale Bitcoin Trust is an ETF. So again, you won't be able to sell that and buy it back 5 minutes later. Now, if you, in your own individual name, bought Bitcoin on Coinbase, for example, that you can absolutely sell and buy back a minute later and book that loss. When it comes to reporting your cryptocurrency transactions, the IRS does still want you to make sure you let them know what you've been doing. So a lot of tools exist to do this. Depending on the exchange you use, you can link that to a tool which will track them, calculate your gains and your losses, and produce a file you can give to your accountant who can file it with the IRS. So for these reasons, our opinion is if you are holding unrealized losses in cryptocurrencies that are not custodied in a brokerage account, you should book those losses to offset any gains you have elsewhere. And that can include some rebalancing. So if you haven't sold some highly appreciated fund that you would like to sell, and you know you have additional losses in your cryptocurrency, you can go ahead and book those and then sell your appreciated securities and have those offset and zero out. And that's what you want. You want to be zeroed out if possible. Otherwise, you're going to be paying taxes on gains that you don't need to pay.